I've been in the investment business for over 30 years. I've never seen the price of gold rise by $100 in one day. I've now seen it 3 times, although it didn't always close that high, but 3 times since Liberation Day. I was forecasting years ago that one day we would see gold moving in much bigger increments. Now, I know as the price of gold gets higher and higher, when you're talking about $3,000 gold, $100 is not what it used to be. When gold was 3, 4, 500, right? If it moved 100, it would be much bigger. But, I think we're going to see days where gold's up 200, 300. I mean, those days are coming.
Peter Schiff, a renowned economist, is sounding the alarm over the fragility of the U.S. economic system, predicting an imminent dollar crisis and a significant shift in global capital flows. He argues that the United States' reliance on credit-based consumption and foreign investment has created a precarious financial structure, which is now beginning to unravel. Schiff highlights the simultaneous decline of the dollar, U.S. Treasury bonds, and equities, an unusual phenomenon that suggests the traditional flight-to-safety mechanism is no longer functioning. He warns that this could lead to a prolonged period of stagflation, characterized by stagnant economic growth and high inflation, which would erode confidence in U.S. financial assets and encourage investors to seek alternatives outside the U.S. The situation is further compounded by a significant exodus of foreign investors pulling out of dollar-denominated assets amid growing concerns over a potential U.S. recession. Many investors seek to shield themselves from the risks of a weakening dollar, leading to a noticeable surge in the liquidation of American bonds, stocks, and treasuries. This flight of capital is reflected in the DXY index, which tracks the value of the U.S. dollar against a basket of major currencies, and has recently dipped below the critical 100 threshold, signaling a growing loss of confidence in the dollar. As foreign investors anticipate lower returns from American assets, they increasingly turn to more stable alternatives, like gold, to preserve their investments, highlighting the shifting sentiment away from the U.S. and its assets amid ongoing economic uncertainties. In response to the dollar's weakening position, gold has emerged as a key safe haven asset. Schiff points to the growing trend of central banks accumulating gold as a strategic move to protect against the risks of holding dollar-denominated assets. Central banks have been purchasing gold at record levels, with February alone seeing a net purchase of 24 tons, the highest since November 2024. Schiff predicts that gold could see significant price increases, ranging from $5,000 to $20,000 in the coming years, not because of a surge in demand for gold itself, but due to the dollar's declining purchasing power. This shift toward gold is driven by central banks and rising interest in the precious metal in countries like China, where both institutions and private investors are turning to gold as a safer alternative to dollar-based investments. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I've been in the investment business for over 30 years. I've never seen the price of gold rise by $100 in one day. I've now seen it 3 times, although it didn't always close that high, but 3 times since Liberation Day. So we really liberated gold on Liberation Day, but this is a big deal to see gold moving up like this. And, I was forecasting years ago that one day we would see gold moving in much bigger increments. Now, I know as the price of gold gets higher and higher, when you're talking about $3,000 gold, $100 is not what it used to be. When gold was 3, 4, 500, right? If it moved 100, it would be much bigger. But, I think we're going to see days where gold's up 200, 300. I mean, those days are coming. But, what's more significant even, than the increase in the price of gold is the fact that nobody cares. Nobody pays attention. I've said this before, but it bears repeating. When you don't know there's a bubble, you don't see the pin. And that, is something that I came up with that line during the housing crisis. Because a lot of people, even after 2007, after the subprime market really started to collapse, most people just shrugged it off. They didn't care. They thought it was nothing. They thought it was contained. I knew it wasn't because I knew we were in a bubble. And I knew that subprime pricked it. But because the mainstream had no idea that we had been living all those years in a bubble, they didn't notice the pin. I did. Well, gold is the pin. And Trump is the one that inserted it into the bubble. Now, gold was already rising before Liberation Day, but Trump really stuck it in there, and the bubble is deflating. But if you don't know that there's a bubble to deflate, well, you don't realize that it's been pricked. And so you kind of make excuses for the pin, which is what CNBC is doing again. I mean, they did it before, when I was coming on their air back in 2006 and 7 and 8 even, warning about the housing market and the financial crisis that would ensue when it popped. And they just labeled me Dr. Doom, and they had a lot of fun laughing at me and making fun of me until all my predictions came true. And then they kind of stopped inviting me on, although they still invited me on a little bit, just not as much. And then they eventually, once the Bitcoin advertisers, showed up, they basically banned me completely. Maybe those things are just a coincidence. I don't know. But it's interesting that the talking heads on CNBC are oblivious to gold and the bubble that's been pricked. They're as oblivious to this one as they were to the housing bubble. But anyway, so I'm watching. I get up early in the morning. And I'm not sleeping that well. So much stuff is happening at night. I get up and I check the markets, and then, it piques my interest. I try to go back to sleep. Sometimes I do. And, so I need to get more sleep. But in any event, I'm up early, and this show Squawk Box comes on, and it starts at 6 a.m. New York time. So it goes 6 to 9. And so I get up, and the price of gold is up $100 an ounce, or 90 at that. Maybe it was only 90 at that time. And I'm like, God, I got to, this is a new record high. We're above 3,300 and I'm like, okay, yeah. I mean, this should be the lead story, right? I mean, you're supposedly this financial news channel. You're going to be bringing your audience the big financial news of the morning, and you got gold up almost $100. You would think that this should be the first thing that they talk about, because, this is not just some commodity, some random commodity. This is gold. Gold is special in the world of finance, right? Gold is the canary in the economic coal mine, and it's even yellow, right? So you're supposed to pay attention to gold.
Since mid-January 2025, the US dollar has experienced a dramatic 9% drop against a basket of major currencies, marking its lowest level in 3 years. This steep decline has raised concerns that investors are losing confidence in the U.S. economy. While currency fluctuations are common, the extent of the dollar's fall is unusual and signals deeper uncertainties in global markets. The sell-off has been accompanied by turmoil in U.S. stock and bond markets, with investors pulling away from equities and treasuries due to worries over the economic impact of President Trump's trade policies, particularly his tariffs. The dollar's decline seriously threatens its long-standing role as the world's primary reserve currency and a safe haven for global investors. Historically, the dollar's dominance has been bolstered by U.S. economic strength and strategic policies, allowing the country to benefit from lower borrowing costs and greater international influence. However, the recent turmoil in U.S. financial markets and the dollar's weakening value suggests that this exorbitant privilege may be eroding. Economists like Barry Eichengreen warn that global trust in the dollar, which took decades to build, can be lost quickly, potentially shifting the balance of power in global trade and finance if the trend continues. The drop in the dollar, combined with the surprising weakness in U.S. stocks and bonds, signals that the market is reassessing the sustainability of the U.S. economy amid the ongoing trade war.
CNBC is the dollar. The dollar is getting clobbered. The dollar hit a new 3-year low against the euro this week. It hit a 14-year low against the Swiss franc. You got all these people, they say, oh, the dollar is the cleanest dirty shirt in the hamper. Well, no, it's not. The Swiss franc's in that hamper, and it's a hell of a lot cleaner. And in fact, the Swiss franc is only a few percentage points away from an all-time record high. You need about $1.25, I think, to buy a Swiss franc right now. In 1971, you could buy one for 23 cents. So that is a huge drop in the value of the dollar relative to the Swiss franc. And of course, even the Swiss franc has gone down relative to gold, but it hasn't gone down nearly as much as the US dollar. Now, this year to date, the Swiss franc's up about 11%. So is the Japanese yen, but the Japanese yen was beaten down, but it's made a big rally. The euro's up 10% this year. It's gone from 104 on January 1st. It's at 114 where it closed the week. These are big moves. And what's even more significant is that this is happening during a time of turmoil, right? Trump basically started it with these tariffs, right? Launched this global trade war, created all this economic uncertainty. No one knows what the hell's going on. Trade is a big part of the global economy. And again, remember, all of these so-called experts predicted that tariffs would cause the dollar to go up. That's why the dollar rallied before, or right after Trump won, because the markets were saying, oh, we're going to get tariffs. That's good for the dollar. And I kept saying no. In fact, when the polls were swinging before he won, the dollar would go up when they thought Trump was going to win, because they were saying, well, Trump's going to be good for the dollar because he's going to slap on all these tariffs, right? I knew that tariffs would not be good for the dollar. But one of the reasons, too, is that people thought, well, it's going to be, people are going to want a safe haven, right? They're going to want a safe port in the storm, that's going to be created by this trade war. Well, they're not buying dollars. They're selling dollars. Gold is the safe haven. They're not buying treasuries either, because I've said this before. When inflation is the threat, there is no safety in treasuries. But the other problem, if the world now has moved away from dollars, away from treasuries, and away from Bitcoin, not that they ever embraced it, but I'll get back into that. Gold is the only safe haven standing. But what that means is if we have another financial crisis, which I believe we're coming towards one quickly, in 2008, the world responded to the financial crisis by buying dollars. And that's what enabled QE to work, right? Because of foreign demand for dollars. That's what kept the inflation that QE basically was. It kept it out of consumer goods and redirected it into financial assets. So we didn't have to suffer big rise in prices, even though we created all this money. Well, based on what's happening now, if we have a crisis and instead of buying dollars, the world sells dollars, and then the Fed does QE, and there's no escape valve, right? That QE is not going into our bond market or our stock market. It's going into the supermarket, right? Then we're going to see the immediate consequences. So the Fed's not going to be able to bail out the economy if the rest of the world is not cooperating, if we can't export those dollars. Because remember, that's what Trump wants to get rid of. And I'm going to get back to that in a later segment here about the trade deficit. I wanted to stay on point on the markets for now. But so the dollar is going down, and the fact that it's going down means that the next time the Fed tries QE, it's going to backfire because it's going to fuel consumer prices rising, not financial prices rising. So this is what gold is telling you. This is a huge warning sign. This is not a meme coin. When gold moves like this, it means something. It's up 25% this year, and we're only halfway through April, and it's 25%. And it's happening when the market is down. The S&P 500 is down 10% this year. So it's down 35% priced in gold. This is a big decline, and it is highly significant. And the mainstream media is completely oblivious. And so these dynamics, once they're in play, they are going to feed on themselves for years and years to come, which is why I'm telling everybody, get out of these U.S. stocks. They're overpriced and they're going down, and get out of the dollar because it's overpriced and going down, and you buy foreign stocks, you buy gold stocks. The emerging markets are going to be the next one. I got an emerging market fund, and that's really not doing anything. I think the emerging markets are going to be the last to move, but they may move the most because I think the emerging markets have the most to gain from the dollar's demise, which is coming. And still, so many people don't understand this. They think that, de-dollarization is going to lead to a stronger dollar because they look at all this debt, right? All these foreign countries have debt, and the debt is dollar denominated. And they're like, well, how are they going to get the dollars to repay their debt if, there's smaller trade deficits and the world is de-dollarizing? Well, they'll buy them. They'll buy the dollars that are going to be a lot cheaper from all the people who are going to be selling their dollars. And, most of the dollar debt that is owed by foreign businesses is owed to other foreign lenders. They're not owed to Americans. You've got somebody in Indonesia borrowing money from somebody in Germany, and they made the loan in dollars. Now, when the Indonesian company, and maybe they're earning rupee or other currencies that are now appreciating, but they're earning these currencies and they have this dollar debt and they pay off the dollar debt, what is the German going to do the minute he gets those dollars? He's going to sell them to get euros. Meanwhile, when the world stops hoarding our dollars and buying our treasuries, what does that mean to the supply of dollars? It goes up because now the Federal Reserve has to buy all the bonds. I mean, it doesn't have to, but it will to stop everything from imploding. So if foreigners don't want to buy our bonds, the Fed will. But the Fed creates new dollars. When foreigners buy the bonds, they use dollars that already exist. But when the Fed buys bonds, it creates more dollars out of thin air. So de-dollarization is negative for the dollar. I don't know how people were able to concoct this theory that somehow people moving out of the dollar was going to push the dollar up, not down.
Amid growing concerns over the declining strength of the US dollar, gold has emerged as a key asset for investors seeking stability. The dollar has dropped significantly recently, raising questions about its future role in global markets. This decline, fueled by trade tensions and shifts in US economic policies, has prompted investors to seek safer options. Unlike other financial instruments, such as stocks and bonds, which have struggled under the pressure of tariffs and market instability, gold has maintained its value, reinforcing its status as a reliable store of wealth during times of uncertainty. Gold's unique position as a safeguard against currency devaluation has made it increasingly attractive in the current climate. As the dollar weakens, traditional investments tied to the currency are becoming less appealing, prompting investors to move their capital into precious metals. That's it for today. Share your thoughts on Peter's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.